What's going on, guys? Welcome back to the channel, and in this episode of Should I Buy, we're going to be talking about LCID, which is Lucid. We have our handy dandy Excel sheet right here. We also have our Yahoo Finance ready to go, and we're going to dive in and start looking at the fundamentals of the stock and what everyone's talking about. Is it a time to buy? Has the stock really come down to a place where now it has value? So with so much of you guys requesting this, let's go ahead and dive right in and see what it is that we're looking for. All right, so we have our handy dandy Excel sheet here. We're going to go ahead and type in Lucid, and we're going to let this do its thing. So we have a negative EPS, which gives us a negative PE, but let's take a look at the return on equity, and most likely that's also going to be a 0 as well. Right there, you can see return on equity just based on the EPS. All right, so bam, we're going to plug that in there as well. So next thing we're going to do is look at the total debt to asset ratio. All right, so we're going to pull up Yahoo Finance. We're going to go into financials. We're going to go into balance sheet, and we're going to look at the total debt to total asset ratio. So total debt here, we're looking at 3.5. All right, so we're going to plug that right there. And total assets, we're looking at that. Perfect. So based on the total debt to total asset, we have a positive figure, which is a good thing for the Excel tracker here. All right, now let's look at the current debt to current asset. All right, so to do that, we're going to look at total current assets sitting right here. So we're going to plug that in, total current assets. And then we're going to look at total current liabilities. And again, this is a good number, 5.2, which is significantly good that you want to see on something like this. The next thing, we're going to look at the operating income versus the total revenue. All right, so to do that, we're going to go to the income statement. We're going to look at the total revenue for the trailing 12 months. I'm going to plug that right here. And the total operating income. All right, bam. That seems to be the problem right there. Whew. This is the most we've seen here, ladies and gentlemen. The income statement does not balance. Minus 427%. Absolute colossal failure there. Out of everything we've done research on, you can see this one is the most significant one here. All right, so with that said, let's dive into cash flow. But this figure alone would scare me as an investor at the time being. All right, so let's go look at the cash flow. What do we got with cash flow? We have minus 3.33, minus 1, minus 1.4, minus 3. So is cash flow increasing or decreasing? Unfortunately, it is also decreasing, just like their price of their stock. All right, so we got all that out of the way. Now let's continue going here and take a look at a few other things. Let's take a look at the ownership, management's ownership. Where we do that, we're going to come right here. Management ownership is at 2%. Great, nothing significant there. We'll add that. Are the funds increasing or decreasing? We're going to have to figure that out. We're going to go to owner and funds here, right here on funds, increasing or decreasing. Let's take a look at what's going on here. A little bit of an interesting situation here. Since September 2021, you can see funds have actually increased their position sizing going into the lows of March 2023, right? So we have 748 where we started at 430. So coming into March, looks like they're starting to load up. So is things kind of pivoting here, or are these the lowest numbers that these funds think they can get in on a company like Lucid? All right, so that is interesting to see as well. Okay, so funds is increasing, but however, we do have a fail on this stock. And that is simply because there was way too many reds here with a significant 427 minus on the income statement. One last thing I want to introduce to you guys and show you guys is the checklist. All right, the Warren Buffett checklist. All right, so here you can see in the Warren Buffett checklist, everything is an absolute fail for Lucid. You can change this. You can come down to the William J. O'Neill. In this regard, the William J. O'Neill checklist, you can see it passes a few of them. Obviously, the EPS rating and the current price being a fail as well. But these are things you can also look at on MARKETSMITH. However, overall, just based on the information that we've given our Excel sheet, we have a fail, maybe not the best thing to invest in right now, or it could be a significant growth name, which in any case, the fundamentals won't look that great right now. So you'd have to take a little bit of a risk, and with risk comes lower position sizes and accumulating less of your portfolio to it. All right, guys, hopefully you guys did find value in this. If you did, go ahead, comment down below what stock you want me to research next, and I will gladly do that. Thank you for watching. Don't forget to subscribe and like, and we'll catch you on the next one.